Is it a 1 minute or a 5 minute?
All right, welcome back to Yahoo Finance Live. We're about 10 minutes away from the opening bell here on this Monday morning. Again, futures are higher across the board. Now, the big story in markets last week was the IPO market, the debuts of DoorDash and Airbnb sending ripples through financial markets. DoorDash shares up more than 80% on their first day of trading, and Airbnb shares more than doubled on their first day of trading. And the surprising aftershock of this is that other companies that were set to go public have decided it's actually not the right time for them to come to market. Wall Street Journal reporting over the weekend that both Roblox and Affirm are looking at delaying their IPOs until next year because they want things to calm down.
What's up, everybody? This week's gonna be a good week. They finally decide to approve the COVID-19 vaccine. So, within a matter of time, the markets will react to that. I'm almost certain that that's going to happen. At first, I think there was a time where they thought they had a cure or they thought things were getting better and the market reacted at some point. Let's see if I can pull up the charts so I can show you guys the weekly chart. So at one point they thought the cure was going to come out and then it got rejected. And from that point forward, a lot of people didn't care. Well, I'm not going to say a lot of people, but investors didn't really care too much about what's going on with the virus because, you know, everyone wants to make money. So with that being said, markets are still shifting on the positive side because, you know, there's money to be made. You're getting stocks at a discount price. So people were investing, you know, buying, selling, trading, investing. So, you know, as case numbers go up, at first, you know, it sounded bad for investors when you hear 10,000 or 1,000 people died. But now, you know, it's like at first people were getting used to it and they didn't really care too much about any news. The only news that was important from February till today was the presidential election, which, you know, caused the market to shift a little bit and then people stopped caring again. But the COVID-19 vaccine, Let's see what's going to happen. Let's see what's going to happen. I believe that at first people are going to invest as well. People are still going to invest, but it's probably going to be a slow process at first until people start seeing results. And the moment that people start seeing results is when the markets will start seeing higher highs and lower lows. So this is, what did they say? The beginning of the end. The market opens at 9:30. Let's see what happens.
Points on how you come to market, well, then I guess their vision of the future actually works. So good for them. And, jokes on all of us, I guess, just sitting here, yapping about it. All right. A lot more coming up on IPOs over the rest of the year, probably the rest of my career here in financial media, however long that lasts. Coming up on the other side of this break, though, we're going to have the opening bell here on this Monday morning. Tony Dwyer also stopping by to talk markets. We're back to that in just 2 minutes.
So last week I called out 5 trades. And of those 5 trades that I called out, 4 of them are in profit. So that's Penn, Lockheed, Home Depot, and Best Buy. Let me see, 2, 3. Well, actually, those are the 5. And Best Buy, Best Buy was in profit at one point. Of course, if you took your profit, then you're good there. Kellogg was in profit at one point. I took my profits as well. Best Buy I decided to keep because Christmas is coming, and I expect that to keep going up.
This is Yahoo Finance Live. I'm Julie Hyman. We're looking at a higher open for
but today is dividend day, so that's why it's coming down. Actually, it might even come, if it comes to this price, then it's a real good buy. 91.
Alexion for about $39 billion, but AstraZeneca shares are down pretty sharply on this. It's not unusual necessarily for an acquirer to fall after announcing a deal. However, the depth of this decline is a little bit surprising, and some analysts are saying strategically this was perhaps not the right move for AstraZeneca. Now, AstraZeneca has a number of oncology treatments. Alexion focuses on immuno-oncology and immunology more broadly as well. Those shares are up about 30% here, but still trading well below the offer price, which I think now is valued around 171, given the decline in AstraZeneca's shares. Still an interesting deal to watch. And of course, there's also in the background AstraZeneca's push for a vaccine with Oxford University, and that experimental vaccine has faced some questions. So we'll see what ends up happening with that. In a very different industry, we were just mentioning Roblox is delaying its IPO. Meanwhile, there is a deal in the video game industry.
That's right. Electronic Arts agreeing to buy Codemasters, a British game studio, for $1.2 billion. Now, the real story here is that EA, which stock is here, you see it up 2.5%, came in and outbid Take-Two.
It's going to be a good week. I believe it's going to be a good week. I think the rest of this year is going to be really good.
obviously,
for the
the
markets.
video game space has been
The
red
market
hot
opens in
this
1
year
minute.
for all the reasons we are familiar with related to the pandemic, but
15
also,
seconds to be
Sazi,
exact.
esports and just the let's call it the metaverse, I think is what all the smart people who write long essays about this call it. The way that video games are now integrating themselves into the future of all kinds of entertainment has certainly made it a very hot space for bankers looking at, hey, let's put all these things together. Then we have, even an even larger market. And so again, interesting to see EA shares higher after they came in over the top of a rival to spend $1.2 billion on another company.
Yeah, Miles, it's there we have the opening bell getting ready to kick off on Wall Street, kick this week popping off right. But Miles, yeah, to your point, video gaming continues to be a very, very hot space. Roblox, the Electronic Arts deal. Clearly, I got the short end of the straw on this deal talk. Huntington Bank shares going out and spending about $6 billion to buy TCF Financial. A little bit of a snoozer type of deal. You're not seeing Huntington Bank shares do much in the early going here. TCF is up about 10%. But really what this essentially does, it combines two regional banks together, mostly players in Michigan and Illinois. You'll see their total assets under management go up to $170 billion. That put the company in closer competition to KeyCorp, which is about $170 billion in total assets. Again, this continues the consolidation in regional banks across the country. I had PNC make a deal earlier in the year.
That Saz reminds me when the BB&T SunTrust merger went through, there was talk about how this was going to finally unlock the golden age of smaller banks merging. Obviously, the two banks talk about here, Huntington and TCF, much smaller than those two. But when you look at all the excitement around the regional banking space, part of it is based on, the economy reopening. But I think there is quite an appetite to put some of these businesses together, especially if the Fed is going to allow it, basically, right? There was no regulatory ability to do this during the last growth cycle, the last economic recovery. Will be very interesting to follow. So let's not sleep on the regional banks, even though I think you're right. It's a little less sexy than pharma and certainly than video games. All right, let's go to how the markets are opening here. Again, we see all three majors are higher in the early going. Inez Ferre.
This is Pfizer. I'm just trying to see what's going on here. I'm going to pull up the 1 minute chart, actually.
Dow up more than 200 points. We're seeing that energy, financials, industrials, those are the sectors that are leading the gains today. And if we just look at our Wi-Fi Interactive board to see how that Dow chart is doing, you're looking at Boeing up more than 2%, JP Morgan up more than 1%, McDonald's up more than 1%. McDonald's received an upgrade at UBS with a price target of $250. Looking at the travel stocks, those are in the green over vaccine developments. You're looking at American Airlines, United Airlines, the cruise line operators. Those are all in green territory. Also, I wanted to mention the EV space. Tesla up 3%. Tesla announcing that it's temporarily shutting down its Model S and X production for 18 days, starting on December 24th. You're also looking at NIO that's under pressure, down about 4% after the company priced its stock offering at $39 a share. This had been announced on Friday. Today, the pricing of $39. That's about 7% lower than what the shares had closed at on Friday. Shares on Friday were under pressure. And then I just want to show you some a trending ticker. Virgin Galactic down about 15% after its test flight didn't reach space as planned over the weekend because of an ignition sequence failure. Year to date, though, the stock is up 86%. And then looking at some of the tickers, which were some of the companies that went public last week, Airbnb today down 4%. DoorDash down 5%. DoorDash was cut to neutral at D.A. Davidson with a price target of 150 miles.
I'll take it. Thank you so much, Inez. Appreciate it. Let's talk more about the broader market strategy now. We bring in Tony Dwyer. He's Canaccord Genuity Chief Market Strategist. And we should remind everybody, we've got a Fed meeting this week. And I bring that up because, Tony, if I could boil down some of your most recent commentary, you still seem to be in a don't fight the Fed kind of a camp. In other words, that there's a lot of support right now from the Fed. That means liquidity. That means that in the longer term, maybe not the very short term, but in the longer term, we're going to continue to see expansion in this market here. Any speed bumps? What are the speed bumps that you're looking at?
Well, first, Julie, happy holidays. Happy holidays to everybody else as well. Our job is always risk assessment. Since April 9th, when the Fed announced that they announced the intention, a game changing intention of buying corporate debt. They've been literally telling you what they're going to do. There's been no gray. How many times have they looked into the camera, whether it's Fed Chair Powell or one of his governors or Fed presidents? How many times have they looked into the camera and said, now is not the time to worry about it. We need more stimulus. We're going to do everything we can to get up to the average of 2% inflation targeting we want. So once that happens, you create a new economic and market cycle. And that's coming obviously out of the COVID-19 disaster. So the risk, in our opinion, is much more of a tactical type risk than it is some kind of fundamental bull market or economic cycle risk.
So speaking of those tactics, then, Tony, you note that optimism or sentiment rather among investors has gotten a little bit stretched here. We've seen it really skyrocket in the last couple of weeks. I guess it sounds like you wouldn't be really concerned about that, but certainly something it sounds like you're monitoring as we enter 2021. And I'd also ask. We've talked a lot on this show about, is the vaccine a sell the news type event? Is that anything that you're thinking about into the first or second quarter next year?
Well, honestly, typically a correction comes from out of nowhere. We'd love to come on TV and pretend that we know what's going to cause this upcoming correction. You never know. It's
in case you guys wondering,
ripe for an
testing out this new strategy
so if you take it back,
on
it's really the last month you've seen this increase.
Day trading.
Because when the S&P 500 was down about 10% from peak at the end of October, there weren't a lot of people saying you got to go small cap, you got to go cyclical. And you got to go emerging. But that's that's been our plan. And the reason they weren't saying that is the market was weak. People were getting pretty cautious, actually. Only 9%, I believe, of the S&P 500 was trading above its 10-day moving average. In a month, that ramped like crazy. It got up to over 90% toward the end of November. So the bottom line is,
so I got into space right above the VWAP,
and frankly, from a
capital
market standpoint,
I'm going to test it out and see how well it works, how well the strategy works. Well, I'm sure it's a good strategy, but I haven't tested it out for myself yet. So
potential fiscal stimulus, they're trying to protect the economy while we bridge that gap. But there has been a historic amount of excess liquidity. The problem that happens economically and from the market standpoint is when you have a need for money and limited access to it. You guys just covered the IPO market. It's been, I'll use a technical term, bonkers. How many IPOs and SPACs and different things have come up. Corporate debt issuance of almost $1 trillion at a historically low interest rate. You got plenty of money out there.
Tony, how severe do you think investor complacency is right now?
Well, let's use the measurement that we use, which is the National Association of Active Independent Managers. It measures active managers, professional money managers, from very small to very large. It is in a level that for 4 weeks in a row we would call extreme optimism. And again, listen, the fundamental backdrop of excess with a synchronized global recovery is very, very powerful. So this isn't a go out and sell everything you own because the market might pull back 5 to 10%. This, our view is that this sentiment extreme of bullishness, opposite of where it was like a month and a half ago, is something that could cause this pause in the upside. If you do get meaningful weakness, given those two factors, the liquidity and the recovery, I think you want to be prepared to attack it versus fear it and try to quote unquote play it.
Tony, finally, you mentioned something in your note that I haven't heard a lot of people bring up, and that's corporate refinancing. You were talking about corporate debt issuance. What about refinancing? And connect the dots for me why you think that is going to be another potential driver in 2021.
Just think about, Julie, our own, my household, right? If you refi your debt, think of how much money you can save. Let's say your mortgage was at 5%, now it's at 3%. On a big number, you save an awful lot of money. Corporate America has never seen interest rates at this level for corporate debt. there's a huge demand, no matter what kind of company you are, high yield or investment grade, huge demand for the debt. So my friend Brian Reynolds, who is at B Reynolds Strategy, came up. He's my quote unquote credit guru. He came up with a number suggesting that if corporate, based on the current situation, corporations can save 20% on their interest expense savings. So with the help of another guru of mine, I call my EPS wizard at Refinitiv, David Aurelio, that translates to roughly a 4.3% increase in the S&P 500 earnings estimates. So we took the current consensus number of 168 for next year and made it 176 by adding that 4.3% in there. It's a big deal, not just for households, but for companies. And that's a conservative number, Julie, because I'm not even talking about what the equity or earnings friendly moves that they can do with that extra 4.3% cash.
Yeah, it's a great point. I love you pulling in all the knowledge and the shout outs from your various gurus there. Tony Dwyer, thanks so much. Canaccord Genuity Chief Market Strategist. Always good to talk to you, Tony.
Great to be with you. Thank you, Julie.
Thank you. All right, we are seeing stocks here on the rise. We will bring you more details when we come back, and also the latest on Brexit. Stay with us.
Wow. Oh, that's Pfizer. That's not me. Okay. So this one's up 3.35%. Oh man, I'm excited. I'm gonna let this one ride out for a while. I got into this one because it touched the support level here and the resistance level here, so I couldn't resist. I just couldn't resist. I had to get in. So that's the reason why I got in this one, and I'm gonna let it ride up. Hopefully, if it goes above this yellow line, I'll keep it until I see a trend reversal. So I'm gonna hold this one for a while. Does this one pay out dividends? No, it doesn't pay out dividends. So this one I'm gonna keep for a while until I see some kind of change of some sort. So I want to go, if it goes over this yellow line, then I'm in good shape. But I bought it at I believe I bought it at a real good spot anyways. So let's see what this one looks like. Okay. So this one is looking good too. This one is look like it's trying to go over the yellow line. So the goal here is for it to close over the yellow line. So I'm looking at the daily chart right now. So if today ends above this yellow line, like even if it ends the way it's at right now, then I'm in good shape with this one as well. Lockheed Martin, let's see what this one looks like. Oh, big gap right above the yellow line. As long as it closes like this, I'm in good shape. And I keep this until I see a sign of a trend reversal.
Yahoo Finance Live. Miles Lipton here in New York on this Monday morning. Taking a look at how markets are opening. The Nasdaq is now up.
Home Depot's in good shape.
Leading the way as we get this trading week.
This stock right here, I'm actually short selling this one. And it's right under. See, this one I want to go down. I want this stock to go down in price. So I'm bidding against the market. This one's under the yellow line, which is good for me on this in this case. So I'm gonna I want this one to close under the yellow line and continue to come down. Best Buy, I'm patiently waiting this one out. Today is dividend day, so I expect it to go down a little bit. But it should come back up sooner than later.
There's a clear change I've seen, at least, and I think most people have seen.
It's Best Buy. What do we expect?
You're getting from both sides.
Dominion Energy. I bought this one. I didn't know where to get in. Well, I'm not gonna say I didn't know where to get in. Hold on, let me zoom out. So this is the weekly chart. This one I got in right here because of the resistance level being here and the support level being here, which of course I could have gone down lower where I marked the white lines, but I didn't want to miss out on this trade.
the key issue of what happened.
So I got in this one, and this is one of the ones that Warren Buffett invested into. So just a matter of time.
Apparently, the EU is considering softening its stance on the penalties that it would impose. That would be quite a big shift. And if the UK accepts that, then the expectations from most analysts are that a breakthrough on the other key sticking point, fishing, would apparently follow pretty quickly after that. So some good signs there. And interesting, too, that a UK minister was asked about possible compromise on Sunday. And he said there were always creative contours in the drafting, which is a politician's answer, if ever you've heard one. But it is very unusual to see the government even hinting at the possibility of compromise. So you're seeing, as I said, not just sterling against the dollar, but also the FTSE 250, DAX, the CAC, all up more than 1% today. Worth saying the FTSE, though, close to flat because those gains for sterling aren't too great for a lot of companies that make their money in dollars. And finally, worth saying that's all in spite of the tougher restrictions we've seen in the past week, either being introduced, announced, or talked about in Germany, in the Netherlands, and potentially in the next hour imposed on London, where I am. We could see hospitality venues forced to close, and I won't be going to a pub or a cafe anytime soon. Miles.
Next time my producer asks why the intro for the 10 o'clock hour is not in yet, I will say there are creative contours in the drafting of that, Tom Belger. That is some excellent political speak. Thanks for sharing that with us this morning. All right, coming up on the other side of this break, a lot more here on Yahoo Finance Live. Stocks in rally mode on this Monday morning. We're back in just 2 minutes.
For together, some of these are investments and some of these are swing trades. And of course, the first week of December, I took really good profits. The second week of December, I didn't take, let's see, I think I got out of like 1 or 2 trades on Monday. And this week is the third week of December, and I'm hoping to be able to get out some trades. And if I don't get out trades, it's because I'm holding on to trades for a long time because I think it's going to keep going up. Like this one right here. Hopefully, I know I got in a good spot and I can take out anytime, but I believe this one's going to ride up for a while, as well as Lockheed Martin as well. Not only this one's going to ride up, but it also pays really good dividends. This one pays $2.60 per share. So not only you're looking at making money on the upside, but you're also getting paid dividends. $2.60 per share every quarter. Like, what is that? Every 3 months? Come on, man.
Well, vaccines to protect against COVID-19 are being deployed for the first time today in the United States. The vaccine made by Pfizer and BioNTech specifically. Shares of Pfizer are a little bit higher today. Shares of BioNTech are actually lower, although the stock has had an enormous run. Let's bring in someone to talk more about the investing thesis for some of these companies. Marshall Gordon is Senior Research Analyst for Healthcare at ClearBridge Investments. Marshall, thanks for being here. You know, Pfizer's had a bit of a run. Thanks for being here. So BioNTech has also had a big run. Are these?
If you guys got any questions, please feel free to comment them down in the chat below, or if you want to join my trading group, let me know as well.
I think those are 2 separate questions. I do think Pfizer and BioNTech have a significant commercial opportunity, certainly over the next maybe 18 to 24, maybe even 36 months. I'm a little more skeptical about how much sales they'll have beyond that period. And part of that is that we've actually seen how effective the vaccines are. And I'm optimistic that they'll provide protection for perhaps many years.
Let's get paid, man.
Maybe need boosters down the road, but we won't.
Why work 9 to 5 when I can just look at a couple charts?
As say, for instance, a flu shot, which would be annual. In terms of the stocks, I think the stocks actually reflect quite a bit of value for the vaccines today. And I think in certain cases may in fact assume kind of annual dosing, which, as I said, I'm a little skeptical about. I wouldn't chase the stocks here. I think that a lot of the quote vaccine trade has probably played out to date.
So then, Marshall, is it just based on what you just said? Is Pfizer and Moderna, are those stocks overvalued here? And if so, where else do you go to play the COVID-19 trade?
So, look, I am not as big a fan of playing specific COVID trades per se. I think there's a lot of great innovation out there in the medical sector and in pharmaceuticals and biotech in particular. So I'm actually more likely to put incremental dollars not behind COVID sort of specific names these days. I think that one set of companies that will benefit, where it may not be quite as much in the stocks, is in the companies that are going to be providing the shots themselves. Maybe the distributors, maybe the retailers like Walgreens and CVS, who also have contracts to distribute.
Look at that, man.
Give the shots
on,
directly to patients. I'm more
I'm
optimistic about some of those.
0.3% already, man.
In Pfizer and BioNTech and Moderna, specifically for the vaccines.
Marshall, I'm curious, I guess, thinking about healthcare outside of the vaccine, because it's been
see these X's on the left means today is dividend day. So when a company pays dividends, they pay a portion of their earnings to shareholders. So that's why they, of course, they lose money because they're paying it out. That's why every time you see a D, the price will go down. See what I'm saying right here?
With respect to some of the bigger political changes that people
it's okay though. It'll come back up.
Call it a year ago. I think a lot of the
it's about patience.
Changes are
if you don't have patience, you lose every time.
It's a little bit more difficult to make a political call here, but I think that if we have divided government, which is certainly a pretty substantial possibility, I think we will probably not have enough votes in both the House and the Senate to pass a very substantial change.
But I'm not getting into any trades until I take out of at least one of these. So if I don't take out any one of these, I won't get into any trades.
I think one of the biggest is a movement towards more virtual care.
Unless I see like the perfect setup that I couldn't refuse. What's this one?
Those are more durable trends that I do think will come out of that will change the system. I think that standing where we are today, we probably have less of a chance of larger scale changes coming from legislation.
Interesting. All right, Marshall Gordon, thank you so much for joining us. Senior Research Analyst for Healthcare at ClearBridge Investments. Appreciate it. All right, when we come back, we will be talking about innovation in quite another industry, fast food. Stay with us.
All right, welcome back to Yahoo Finance Live. Miles London here in New York. Certainly 2020 is a year we are going to remember for the innovations we saw with respect to the development of a COVID-19 vaccine. Just about 6 months from when we first knew that COVID was spreading globally, we began to see the outlines of a vaccine developed, and it has now come to arms here in the U.S. and across the developed world. But another area of the economy has seen an extensive amount of innovation this year. That, of course, is what's happening in fast food. Brian Sozzi, it's been quite a year for the fast food operators. Now, unfortunately, this is coming at the expense, and we'll talk about this with Nigel Travis later on in this program. It's coming at the expense of small restaurant operators, the restaurants we really love. But if we do look at the year fast food has had, it's been an exciting one, and it's continuing now at locations nationwide with the McRib.
Well, Miles, you and I don't agree, I think, on the Airbnb IPO and also on bank deals, but I think we can agree that the McRib, that nationwide return on December 2nd, that's an innovative product. We don't know if it's actually rib, but there's a lot of sauce on it. It's interesting. It drives people to the restaurant. But we have started to see, after a year of big fast food focusing so much on just making sure they have their online ordering systems work correctly, over the past month, we've seen big food start to take more innovative big bets on their food. Look, over the past month, we had the Yum Brands team up with Beyond Meat for that new faux sausage pizza. We talked to Ethan Brown about that on our network. And you also had Chipotle, your favorite, Miles, start to test brisket in 64 restaurants. So it gives me hope that as we get beyond this dreadful 2020, we might see the return of innovative, traffic-driving, fattening, high-caloric fast foods at Big Food.
I mean, if I can push back, I mean, the McRib ain't new. So it may have been innovative when it came out, but how many years has it made the McRib? And brisket, is that innovative? Obviously, you never came to my grandmother's on Rosh Hashanah. I mean, come on, like, maybe it's innovative for fast food, I suppose.
You don't expect to see brisket at a Chipotle. That is innovation. The McRib,
okay,
I'll push back on that one too. I mean, it kind of looks like a rib with bones, but there's no bones in it. To me, how they pull that off all the time, that's innovation.
I don't want to know.
I'm not telling you because I don't know either.
The thing I'll say over the hammering happening outside my apartment here is that the real innovation is being able to say on your Twitter account, we're doing spicy nuggets, and then the next day they're in every McDonald's across the country. That is an amazing feat. And I think whether we like the food or not, you got to give the operational logistical credit where it's due there. All right, coming up on the other side of this break, a lot more here on Yahoo Finance Live. Again, stocks higher to start the week. We're back in just 2 minutes.
Yeah, people can say whatever they want. When they hit a good key level, it's going to move. I don't care about no bad news. If it's a key level, it's going to move. I'm already at 0.4%. Another good day, man. What up, Brandon? Did you cash out on Pfizer? I told you about that. I got into Pfizer a long time ago, bro. Let me check. I've been at Pfizer. Let me show you what I think I got into Pfizer like at. Let me pull up the weekly chart. Let me see if I can find it. I got in Pfizer like here. I got in Pfizer somewhere around here, and I sold it at $36. I sold it up here somewhere. See if I can find that order actually. I don't know if I'll be able to find it, but it was a while back. But yeah, I got in at $30. Actually, I got in at 29. I remember I got in at 29 something. Oh, was it not? It might have been 30 then. But I thought it was like 29 something or 30 something. It might have been 30. And I sold it at 36. But I did that back in the day here. I got into that one right here. And the only reason why I got into that is because it hit this key level right here, and that was before the COVID happened. And when I look back at the chart, it was here, and I was like, oh, I'm going to buy it. And then that was before they even say COVID vaccine. But the moment that they say COVID vaccine, then that's when this all happened. And I kept it for a while, and then I realized nothing was going on, so I sold it.
And in New Jersey, we will begin to see the vaccine rollout starting tomorrow, and that is where we begin our conversation during this hour. We're joined now by Yahoo Finance's Anjali Kamlani, as well as Dr. Sharif Elmahal. He is the CEO at University Hospital in Newark. Dr. Elmahal, great to speak with you once again. I'd love to just begin with where your hospital system stands with respect to New Jersey's rollout, which again, as far as I understand it, will begin tomorrow, and what you are anticipating over the coming weeks.
I only got like a couple of shares on this one. This is a company that got bought out by another company, so I was like, let's see what happens. So I didn't invest that much here, in case you guys wondering what this is. This isn't really anything. That's why it's not affecting my percentage. That was just a test to see what was going to happen.
Attached to the hospital, we had to find a very wide open space to essentially set up 4 lanes where folks are going to be vaccinated starting tomorrow morning. And Governor Murphy is going to be joining us for the vaccination of the first healthcare worker.
What you got, Brandon? Tell us what you got.
Vaccine. It's in our ultra cold storage freezer, and we're ready to administer it.
Dr. Elmahal, I know that there's a lot of questions about who will be receiving the vaccine. I know that healthcare workers, especially those on the front line, are part of that. Do you know if the administration will also be receiving them, individuals like yourself, in order to help with vaccine confidence?
We're sticking very close to what the CDC and the New Jersey Department of Health identified as the first folks up for this. And so we're sticking with folks who normally interact with patients, not just physicians and nurses, but also unit clerks, environmental service workers, food service workers, anybody who has the opportunity to be exposed, really anybody who interacts with patients and their families as part of normal course. Which actually,
yo, what up, bro? I'm back streaming the markets, man. I took a little break because my internet been acting stupid, but I got it fixed. My internet's good now. So
what's the deployment process look like? And I'm also curious, we spoke to a guest earlier who pointed out
I even started a trading group on Facebook, bro, because people keep asking me. But just to give you a little update, the first week of December, we took some good profits. The second week of December, I think I took out like 2 trades maybe, but it was I guess close to a dead week last week. But I did made all these trades last week though, so I'm still holding on to them.
We're going to be getting shipments every single week until we end up vaccinating all of our healthcare workers, and then we're going to be.
This right here is a company that got bought out, so I just bought it. I just bought it. I didn't even buy that many shares. I only got 12 shares, so it wasn't that serious, man. The reason why the percent looks like that is because that's how much it went down. But that's 12 shares at what? How much is it? $5. So it's a company that got bought out by another company. So I just wanted to see on this one. I just wanted to see what was going to happen. You know, like ain't nothing wrong with buying the cheap ones and seeing what's going to happen to them. Apple is an investment for me.
Folks missing work 1 to 2 days afterwards.
But the ones that I got in last week was Penn, Lockheed Martin, Home Depot, Best Buy, and I think that's it.
And make sure also.
I feel like there's another one. Am I missing? Yeah, that's it. That's it.
Dr. Elmahal, I know that also, we have Moderna's hearing this week as well. Are you planning the vaccinations in accordance with
Tariq, what up, bro? I got low stock.
With the idea that only
let me take a look at the ones you got, bro.
Well, the New Jersey Department of Health is being very careful about how they're allocating these vaccines. And one thing
What
they're
up,
doing is
Tariq?
making sure that every
Let me
facility
check
that's
out
getting a
Brandon
vaccine
stuff. See
only
what he's
gets
talking
one
about.
type as we start, because they don't
MYSZ.
even want to give the chance for a facility to give one type of vaccine on dose 1 and another type of vaccine on dose 2. That would actually be
Nah, I'm not getting
not
into that.
consistent, of
See,
course, with the
I don't,
clinical trials
yeah,
and
some people can do
confirmed
it, but I don't think
clinical
I'm good
benefit
enough
levels.
to
So
trade
we're going to be sticking with
stocks
the
like
Pfizer
this.
vaccine in the coming weeks, and when we are told that we can receive the Moderna vaccine, we will be able to do so.
And the only reason
One thing
why
that's
is
interesting about Moderna is
because
that it does not require
if a
ultra
stock's
cold
$1 and it goes
storage
down
to
10
be
cents, that's
-70 degrees
10%.
Celsius. It can be stored at warmer
I ain't got
temperatures, which
time,
means we
man.
can go to more places if it does get the EUA this week, and we're all hoping that it does.
But also,
And Dr.
it's a
Omaha, the last
downtrend.
time that we spoke to you was just before Thanksgiving holiday.
Sometimes they shoot
We saw
up,
cases on the
but I
rise,
don't got time. I don't got the
nationally,
money
and
to be
certainly
hoping that they
the
do
outbreak
shoot
of
up. You know what I
in your
mean?
area has continued since then. What's
These
the
ones like
state
this,
of your hospital
I'm
system's
cool with it
capacity,
because I expect
and
it to
what
go
trends
up.
have you seen in your emergency rooms and just in your point of care
I expect this to go up,
locations
man.
as it relates to the
I bought it at
outbreak?
a
We know
real
it's
good
gotten going,
spot.
certainly in the county, Essex County, where you are, but broadly in this metro area.
Well, we have started to see a very slight uptick in hospitalizations, and now 2 weeks
And the
plus
first thing I like to
after
look at is the
Thanksgiving, and
market
we are
cap. That lets me
looking
know if the
at
company's going out of
this
business
very
or not.
closely to
I mean,
make
at
sure
least
that
right
we don't
now,
see
I
a spike
mean,
due to household
maybe
gatherings
in the
as
future,
usual. And thankfully, we don't
after all
seem
the
to be seeing
coronavirus stuff
a
goes
very steep
away,
increase.
that's
But
one
of course,
thing. But
it's
right now, you don't
happening
know who's
as
going to go out of
cases
business and who's
continue to
not.
rise. We
So
still see
I don't want nobody to
numbers
take my
in
money
New
under the drain
Jersey
with them.
at a place where we don't want it to be, and the rate of transmission is also high as well. So we are still in the thick of this second wave. We cannot
All right, let's
declare
see what
victory,
4 look
even
like.
though we have not been
I think I was in
overwhelmed
this
with
one
patients
actually.
yet, and we are planning for all scenarios as we
This
move
is
forward.
good. You're still in good shape here. Well,
All right,
obviously
Dr.
depends on
Tariq
when you
Omaha,
bought in.
CEO of
But as
United
long as it's
Hospital
above this yellow line, you're in
America.
good
Thank you so
shape,
much for
bro.
joining the program. Have a great holiday, and we'll talk to you next year.
Thank you for having me.
Oh,
All right, let's turn our attention now
GM.
to distribution of vaccines and how some companies are involved in the supply chain of going, from where you are formulating the vaccine to getting them to facilities across the country. For more on this conversation, we're joined
Yeah,
now
see,
by Kim
stocks like
Beth, who is
this,
Senior
I'll
Vice
put like
President of Healthcare and
50
Sciences and the
bucks
Chief
in
Sales and
or
Solutions
100 bucks
Officer
in,
over at
and then or
UPS.
$100,
Thanks so much for
$50
joining
in,
this
and I'd be like,
morning.
well,
So let's
if I lose, I lose $100. Who cares?
you sit in this
But if I
process
win,
as
I
it
win big.
begins to roll out here in the
That's
US.
how I am
What
with
has
these
happened
kinds of
so
stocks.
far with UPS?
But they gotta
those
be.
facilities and what you expect
I mean, I ain't gonna sit there and say this ain't a name brand stock, but I don't know nothing about it, so that's why I call it not name brand. When I did do that, it was stocks like GM or GE, stocks that you just know gonna go up.
Moved the first immediate shipment right after authorization was provided.
Thank you. I've been in for a little while. Nah, you in good shape. Let me take a look. As long as it constantly stays above this yellow line, just keep it, bro. Like these stocks here, I got into this one because you know me, because if you've been watching me for a while, I like to mark support and resistance. So here, that's what you got. You got support here, and let's see. All right, so here you got your support level. I'm gonna hit about right here. Here and resistance level is here. But the reason why I got in here is because I was like, you know what? I want the best position possible. So I put it here because this green line that you see. Hold on. I put it here because the dotted line, by the way, I just realized it's 2 green lines. I put it here because here demonstrated support level, here demonstrated a resistance level. So if it's both of them like that, you can do nothing but go up. So, well, obviously it's not a 100% chance, but I took that chance and I bought a couple shares here, and I'm taking it up here. So now I gotta hope it goes above this yellow line. Under the yellow line shows that it's a downtrend, which it did go down, but I'm hoping I got the bottom of the downtrend to take it back up.
The first shipments, and that is what occurred.
I'm getting GE soon. I heard something about magnetic motors in the future. Let me see. I haven't seen GE in a while. Let's see what that one look like. General Electric. Yep, I got this one. I remember this thing was like $6. Yep. See, I still got it marked.
sites.
That's what I got in at.
CVS would be a great
It's
example,
too late.
great partnership that we
See,
have
I don't like to like
where they reach
certain
out
stocks. I don't like to have for a long
So,
period of
as
time
the
because
stages of progression
also the
for
RSI is
Operation
above
Warp
70,
Speed,
so you can sell
we
it
cover
anyway.
every
But
address in the US
I don't like to
and,
hold stocks for a long
over
period of time. I used to,
200
and then I started getting better with the
worldwide, so
trading.
we are prepared to
So
help
I
wherever
kind of
that need
stopped
exists.
just so
Hey, talk to us
I
about if you
can
had
like
to
for
retrain
example,
your employees
I
inside
used
the
to
facility
what's
to
up?
become
What's up,
truck
bro?
drivers to handle these vaccines?
Like I used to
So,
like just
UPS
invest
Healthcare
into it and then
has
just
really
hopefully it
been
goes
in
up. Like, you know,
existence for
stocks like
over a
Apple.
decade. We handled,
You know,
just
it'll
as
go up
an
eventually.
example, over 1
But then I
million
kind of
commercial
stopped
trucks
doing that.
last
And then
year.
I
Some of
started
them
selling at points
also
like this
had some temperature
and then
control
taking that
equipment.
money
So we've
here
been
and
training
placing it
dedicated
someplace
service
else who has a lower
Healthcare
day, not
division,
AMC, but
over again years.
stuff like
Today,
that.
what it really is about is reinforcing the needs of each specific
I mean, I would have done
we have
AMC if it
the
wasn't the
process and the
pandemic,
technology that helps us to do
but the
that
pandemic kind of
seamlessly.
threw me away from
So
it,
the
man.
sensor
So
actually is contained right within the box. and
space
actually
turning
is,
bullish. I
broadcast
just was
to us.
I was playing around with
So
space actually just now. I was testing out
24/7,
a new
we
strategy,
know
but I didn't
the
buy that many
temperature
shares,
is
just like a couple, just to test it
and
out and see.
also we have UPS
Oh, it's going back
Clear,
up.
which is GPS
No,
tracking.
I was looking
So
at
we know the pinpoint location of all of these packages.
the 1 minute chart
As more
actually,
and
but
more
this
of
doesn't
these
look bullish to
vaccines
me,
come to the
man.
market each
I mean, it
week,
might go
and
back
the
up. I mean, it's
conditions
above the
of
yellow
use,
line, but this
because
candle
of the
right here
experience we've had in
closed
UPS,
kind of
we
like
feel
bearish to
very,
me.
prepared to deliver, and all of our employees trained to do so.
So as you have had that tracking and the
I probably just
sensors
gotta
trying to
wait
keep
on this
tabs on the
one.
temperature, have you seen any fluctuations thus far? Have there been any
That
doses that you all
reverse
have had to
hammer
restart?
candle.
Because you've seen, I mean, you're sending out a
That
lot of
shows
business here. You're
me
sending out a lot
something
of
different.
business here.
I gotta wait till it comes back down
Although one would hope
to
that
see
they
a better
all
sign.
arrive in their temperature controlled condition, one would imagine there's along the way there are going to be some that don't make it.
Yes, at 100% on-time performance as of right now.
I
Again,
grabbed
we're
a 28
delivering East
call
Coast right now, and then
on
as
the
the
dip.
time zones
All right, hold
progress
on.
throughout the day, we will be delivering. So we're actually delivering early, and the temperature has
Oh,
gone on. So
I
there
see.
is
I see.
a deviation range that is an allowed tolerance, and none have deviated from that. So we're glad.
You gotta
that
get
all
it, man.
is
Like,
off and that we
it's
are
money to be
delivering
made out here,
very
man. Like,
critical
that's why I don't be trying to go to
vaccines
work,
to the
man.
needed medical facilities.
Okay, for those not necessarily too familiar with the UPS story, are these shipments of these vaccines on these trucks, are they as profitable as shipments? Let's
Is
say,
space
for
competing with you talked to my dad lately?
So I won't talk
Too late now, Bob. I know it's too late. I like the perfect entries, bro. So if I lose, I don't lose bad. You know what I mean? You talked to my dad lately? No, I haven't talked to him in a while, man. That's just this COVID thing, man. It's been making things dumb.
Because it gives you
I don't, man. I haven't traveled in a long time. I usually travel all the time, bro.
and there are many others.
SRAC turning bullish. All right, let me look it up.
That you give. But I would tell you that when we look at our whole healthcare business,
this one's
this delivering more
you call everything bullish. You mean bearish?
That are in need. We know that value in coming through and making our service commitment, whether it's during the peak season or not, is critical. So to that point, our peak season is underway, as you well know. Anyone doing holiday shopping, and UPS has demonstrated every week so far in peak, as accounted for by Ship Matrix as the top on-time performance. And I would tell you the best that we've seen.
I love seeing green.
Customers. But that goes hand in hand with these vaccines.
Let them know, Bob.
Because we want to make sure a network that delivers the value that we offer to our customers.
And you obviously still have some time to go before we get to Christmas itself. Kate, finally, I wanted to ask you about security of the drivers. If you guys are providing anything sort of extra for the vaccine distribution.
Yeah, so I would tell you, the reinforcement of the technology helps to give us pinpointed accuracy as to where the product is. And then, of course, surrounding that package and really any sensitive package in the UPS network with more security is what we tend to do. And of course, as an underscore to that, we don't disclose the details because you want it to remain secure. But we feel very confident that there will be no mishaps and that we are delivering on time for these critical vaccines.
Kate Gutman is UPS Senior Vice President of Healthcare and Science.
Oh, let me pull up my Telegram. Hold on.
Kate, thank you so much for speaking with us. And of
Man,
course,
I don't be
thank you
having
to
this thing
UPS
pulled
and
up.
all of the
I
other
be having to
companies
turn it off,
that are
man,
helping to get
because I'm in too many
vaccine
groups.
out to Americans as well as people around the world. Appreciate it.
All right, let me look.
Thank you so much. Take care.
Thank you. You as well. All right, when we come back, we'll be talking a little bit more broadly about what's going on in the market and what some of these recent IPOs can tell us about valuations. We'll be right back.
Yo, hey, Derek, you still there, bro? Do you know anything about I think it's called Ikimoku Cloud? I want to learn how to use that. I heard that it was really good, but I don't know anything about it. I might just stick to what I know. I don't know yet. We'll see. All right, let's see what we got here. Pull up the daily charts, baby. I'm out here making my mama proud, y'all. All right, time to pull up the weekly charts. See what we have. The weekly charts lets me know everything. Pfizer. See, this is what I'm saying. I mean, I guess it's at an all-time high, so people would sell it, but I just don't understand. Like, the COVID vaccine's coming out today, tomorrow, next week, and all of a sudden the price goes down. Like, how? I thought that was good news. I guess for everything else it is. You day trade? I mean, I don't think I'm that good at it, but I'm trying to learn it. I mean, I know how to do it, but I'm still trying to like progress in it. You know, like I do have a chart set up for it. Let me pull up something like I do have the chart set up for it. I don't know. Do you look at the 1 minute chart or the 5 minute chart when you day trade? And I do have the VWAP set up, stuff like that. I mean, I have the setup. I'm just trying to. I think what I need to start doing, I need to start looking at higher time frames to determine if it's a good place to be. Because I keep forgetting to do that sometimes. See, what swing trading, I don't really got to do that. I just can get in.
Multi-asset strategist. And obviously, these IPOs in particular, Mark, have gotten a lot of attention. Does it tell us that things are sort of bubbly right now and too frothy? Or is that there's just a heck of a lot of demand out there?
Great question, Julie. Thank you for having me on this December Monday. You know, it tells you, and it's great we're talking about this week because the Fed is meeting on Wednesday. And this is all about what the Fed has done in terms of, you know, pushing economic activity, supporting markets with their open market purchases and their incredible accommodation, and other central banks, of course. And that is pushing people deeper and deeper into other asset categories, including, you know, what we call, you know, private equity and venture capital. And those products are very expensive for the retail investor. So when you get an IPO like Airbnb or DoorDash, that's a form of venture finance that individuals can get their hands on. And so they get bid up very aggressively. So I don't think it says so much about broad valuations as it does about the reach for return at a time when yields are going to stay really low for a long time. And there just isn't that much growth equity available in the public market.
Mark, just playing off that, I mean, do you think the Fed has sown the seeds for the next bubble in risk assets?
I wouldn't interpret it that way. I think, as I said before, there is dramatic organic need for return. If you look at the forward expectations of public markets versus the historic returns, whether you're looking at public bond markets, public equity markets, the forward expectations are dramatically lower. And that is forcing people into other asset categories in the private market, such as venture capital, private equity, private credit, et cetera. And so I don't know that the Fed is sowing the seeds of bubbles. What's happening is the street and corporations are innovating. Julie mentioned SPACs. They're innovating and creating new outlets, new products. And that in turn is creating opportunity for people to try and achieve those returns that they need for their endowment, for their foundation, for their family office.
And when you think about, those dynamics going forward, Mark, are people maybe understanding those dynamics more quickly in this cycle than the last cycle, where there was a lot of hate towards the market rally off the bottom for several years? It seems like everyone kind of, got on board come September and now have been maybe a little more creative earlier in the cycle in how to achieve some of those targets.
Yeah, it's an interesting perspective. I don't know if people got on board earlier. I think what has happened is there's just a broader acceptance that around the world, central banks are on full duty and are going to stay on full duty for a prolonged period. And that provides underlying support to take a higher degree of risk than you might have in prior cycles. There just isn't the ambiguity about whether central banks will be supportive, both in the traditional fixed income markets, but also more broadly the capital markets. And so that comfort allows people to step in and buy the dip. So when there's a scare, like we saw a little bit in October and we've seen previously in over the course of 2020.
What's up, bro? You said you have that big of an account. What do you mean? Do I have that? Oh, you said I missed what you said. Do you day trade? Nah, I mean I'm learning it. I'm learning it. I mean, I know how to do it, but I haven't been really doing it that much to do it. I've been, because I think I've been winning more swing trading, even though I do want to day trade, but like my swing trade results just so much better, But I would love to learn how to. I know how to do it, but I need to win more to have that confidence to be able to do it, if that makes sense.
Public comments and the other information sources just like you do, and it's clear that there's an awful lot of individual activity.
You have that big of an account? Yeah, I have 2 accounts. I got this one, then I got Robinhood, but I think I want to start. I might get TD Ameritrade too, because I like how they got the mobile app. I don't know. I'm still thinking.
Closed-end funds, whether they're BDCs, they're very involved in private markets. They're buying pre-deal equity. They're buying private loans, private credit, and they're very involved in the private markets as a way to get kind of outsized returns versus the public markets. And so when these transactions come to the public market, they're measured not against the S&P or the NASDAQ, but against what they can generate in private markets. And sometimes it works, sometimes it's compelling, sometimes it's not. But there's a real push into less liquid, higher return markets. And I think
I've seen that, but I don't know. See, the market moves slow around that time anyway.
And just very quickly, Mark, is there also risk though in that?
Yes. Well, I think your prior segment was fascinating, talking about some of the nuances and concerns around distribution. Even more importantly, are concerns about the take-up of the vaccine. There are a number of people, as we know, not just in this country, but around the world, who are skeptical about taking vaccines. And
I'm sure that's a good. I just don't want to have too many accounts. You know what I mean? That's the thing. Because what happened was I got this account, my Merrill account, because I wasn't trading at first, but I was investing into stocks. This is before pandemic. And because I've already had my investments here, I just started using that to trade with. And the reason why I got my Robinhood account is because there was some stocks I couldn't get on this account, so I got in my Robinhood account.
That's going to be a crimped
Plus,
economic activity.
I can give people the referral code to make more money.
Yeah, definitely something to keep an eye on. Mark Howard, BNP Paribas multi-asset strategist. Thank you so much. Appreciate it.
Thank you.
Well, when we come back, certainly it's a lot of people have been eating at home this year. We have seen a boon to many consumer products companies. We're going to be talking to the head of Hain Celestial next.
All right, bro. Hey, thanks for stopping by, man. I appreciate it, bro. You gotta start streaming the markets too, man. You and your groups, y'all should do like a group stream.
Hain Celestial has been one of the hottest food stocks around during the pandemic, notching a 44% year-to-date gain. Let's bring in Hain Celestial CEO Mark Schiller for more insight into that big move. Mark, good to finally speak with you here. In reviewing Hain's year, I do get the sense it hasn't been all pandemic driven. It's very much a lot of operational things you and the team have done this year to turn this company around. How different, in fact, is Hain going into 2021 compared to when it started at the end of 2019?
Yeah, thanks for having me on. I appreciate it. We have been in the midst of a transformation for the last 2 years since I started. There was a lot of complexity and a lot of work to be done in terms of just moving from a holding company to more of an operating company. So getting the customer service right, getting a much simpler organization to do business with for our customers, and getting systems and processes in place that would allow us to be kind of a stable growth company. We had done a lot of things prior to the pandemic, reducing unprofitable businesses and individual items that were losing money, simplifying the number of sales force.
I want to end this year strong, really strong with these trades. I may be able to get into another one,
and then of course when the pandemic hit and more
occasions went into the house. I want to end this year strong.
And so then,
like I want to hold these trades as long as I could to hold to end strong.
Because of the pandemic, did it change any of your plans that
Bob,
you guys had?
SWI might be a good swing. Let me look.
Did it change any of those plans given the trends that we've seen change and maybe some ones that you maybe think might stick here?
Certainly, we had to spend a lot more time making sure our employees were safe, making sure we had backup sources of supply and that we weren't going to see any disruptions. But we serviced
I thought you were saying, Bob, like the I thought you were listening to tickers. So I was like, oh, Bob and SWI.
And we saw a very significant increase in our household penetration and our repeat rate as a result of that. So we've been a beneficiary of good kind of pre-work, if you will. And I think as we come out of the pandemic on the back end sometime in 21, that money that we've spent against the consumer, the innovation that we brought to market, we think is going to...
See, normally what I do is I'll see something like this, and I'll mark it like this to set my alert. And what happens is I'll take out,
want to ask you about your European business. That has been a business.
I'll get an alert that lets me know it's getting really close to that price.
Are you nearing
And then I'll usually take out like a real good high position and place it there and keep going up.
We are close to a sale. We have a lot of interest in that business. It's not core for us. It's a very complex business with people hand slicing fruits and sticking them in plastic containers with very short shelf life. And so it will do better in somebody else's portfolio than here. Once we are successful in exiting that business, what you're going to see is our international margins will grow several hundred basis points, and our top line growth rate will grow significantly. It's really been a drag for us, and it's about $160 million business. So it's a meaningful chunk of our overall sales, and it has really kind of masked the growth and the margin expansion that we've seen throughout the business because it's been a drag. So we expect that we will exit that business sometime early in the new year.
Mark, it's Julie here. You talk about exiting that business. What about Hain traditionally had been known as an acquirer, right? Rolling up a lot of natural foods brands. Is that going to continue? Are there areas in your portfolio where you're seeing a lot of growth or where you want to add growth?
Yeah, so we had acquired 55 businesses over 25 years. And because we managed them as more of a holding company, the complexity of that many brands became overwhelming. So since I started 2 years ago, we've shed 17 brands with about $800 million worth of sales and greatly simplified the business. There are a few more that likely will be exited, but we're also at a point now where we're starting to look at acquisitions again. More strategic acquisitions in places that we've prioritized, like snacks and tea and personal care and plant-based meats and non-dairy beverages in Europe. So there are some terrific growth businesses that we have decided to focus on and manage for growth going forward. And we will be looking in those places to make strategic acquisitions.
And Mark, just quickly also, I wanted to ask about supply chain, because this has been an issue for a lot of food companies where they're seeing a lot of demand in certain areas that they're not able to meet. How are you guys doing on that front?
So I think when the pandemic hit, we were fortunate that we have a significant part of our business in Europe and really saw this coming, I think, before other people did. So we were able to find backup sources of supply and make sure that we had the right things in place.
As long as you see green,
and as we
or
come
golden.
into the surge that we're now seeing,
Golden, baby.
We've looked at things that have a long supply chain and really are very well prepared to continue to service the business. And in an
So today's the dividend day for Best Buy, and I'm only down less than 2%. So I'm fine with that.
start having growth
Sometimes, like I said, you know, these trades don't always work out the first second you get into them. Sometimes you gotta wait them out.
Thanks for keeping my tea on the shelf
So
throughout the pandemic. Appreciate it.
My
I
pleasure.
think
Thank you.
All right,
it's
do
gonna
stick
it's
around.
gonna
Much
start
more
pulling
ahead on
back up
Yahoo Finance
eventually.
Live on this Monday morning.
So I believe what's gonna happen is when I get out these trades here, and I get into more trades, the new trades might, well, of course, some of them might go down, some of them might go up, but by then these ones will start going up. So I'll still be looking at daylight in the trades. I hope, or at least I hope.
Well, people who are buying presents online this holiday season have more options than ever in terms of payment and also in terms of not paying immediately. Klarna offers one of those options. It's a buy now, pay later service. Also, the most highly valued privately held fintech in Europe. And the founder and CEO, Sebastian Siemiatkowski, is joining us right now. Sebastian, it is great to see you again. I want to start actually not with holiday shopping, but somewhere else, if I could, because we here on the show have been talking a lot about the hot IPOs recently. We've also, of course, been talking about one of your competitors, Affirm, which now appears to be delaying its IPO. Where are you guys standing on that front in the IPO process? How are you thinking about timing at this point?
Well, I think, look, we've been very fortunate. Our biggest shareholder is Sequoia Capital, and Michael Morris is on our board, who obviously was on the board of Google and YouTube and a lot of other successful companies. We've had this discussion for a long period of time. They joined as an investor 10 years ago. They've had a very long-term perspective, and we still do. So, we'll see how things develop. But from our perspective, there's benefits to IPOing and being public, but there's also a lot of benefits to being a private company. Private markets are still very liquid, and also it allows us to be very long-term about what we're doing, because we generally think that this is going to be the decade of disruption in retail banking. The last one was about the disruption of retail. Now it's retail banking's time, and in that disruption, you want to have a long-term objective because there's going to be a massive shift in this market.
Sebastian, I do want to, let's just assume you are going to stay a private company. You got a bank license, I believe, in 2017. What are your plans to utilize that more in 2021 and beyond?
Well, I think that we are continuously building out more products in that area, less so in the US, obviously, than in Europe. But what we, if as an example, in Europe, we have in the last year issued over 500,000 debit/credit cards, which obviously is a quite amazing feat for us. So we're quite happy about that. And we're developing deposit services and so forth. So in Europe, we're more known as a neobank, similar to Chime maybe in the US. So a slightly different offering than the one that people associate with us in the US.
And Sebastian, building off of that, I'd love if you could maybe outline some of the dynamics that are different in Europe versus the US. And it seems to me, from my vantage point, and what do I know, that fintech in Europe's a little bit more, I don't know if advanced is the right word, but it certainly is more ubiquitous or wider spread. Do you see some of those trends coming to the US here, and what might that look like? What are the players that are going to be disintermediated by the growth of a company like you guys and Affirm here in the States?
Yeah, I can't really tell why that is the case, but it does seem to me that there's been more successful large-scale fintechs in Europe. I think, look, as I said initially, we're going into a time where I really believe that this is the decade of disruption of retail banking. And if you ask yourself, like, who's going to be successful in that, I think we're going to end up with a few global players that play in the retail banking space. And some of them will have their origins in the tech companies. Some of them will have their origins in banks that are able to reinvent themselves, and some will be fintechs. And then some people will lose out in this transition, as always happens. And so I think that's kind of how things will play out. In regards to Klarna, we are seeing now almost 12 million users in the US alone. We have 90 million users globally. So we think we're on an exciting trajectory to be one of those succeeding players in that disruption. And obviously over time, we want the consumer experience to be the same across all markets, because we're seeing that that is actually doable today. I mean, 10 years, 20 years ago, it was very difficult for a bank to offer consumer services across all these jurisdictions because it was so many different regulations, different challenges. But today, it's actually possible to do that thanks to the more modern technology that we used in the legacy banks.
So, Sebastian, if you guys are starting to issue debit and credit cards, for example, and you have that bank charter that you were just talking about a few moments ago, how then do you differentiate yourself from a bank? In other words, what makes you special sort of as a fintech, and how do you do that disruption while still, retaining your identity as a fintech, but offering traditional banking services?
Well, I think it's in that mix, actually, that the excitement is that we're both kind of a fintech, fast-moving, fast-paced, innovate a lot, try new product offerings, be very customer-obsessed. I mean, the biggest, it's not maybe a big secret, but the problem is that the banking industry had more or less given up on their customers. They're not very customer-obsessed. They're more profit-obsessed. And I think that like there's a big opportunity to come with a bank offering that is actually about the consumer. One example of that is the buy now, pay later solution that we provide in the US, which actually allows people to take a $200 purchase and split it on 4 equal free installments with no cost to the consumer. Now, that's very different from the traditional credit card charging you 29% if you revolve. And so like that's one good example of that. And then we've also are very favored in the US by the fact that people like Macy's and Etsy and Sephora and Express and Foot Lockers are promoting these solutions to their consumers because they in turn see a lift in AOV and lift in conversion rate as the younger demographic doesn't use credit cards anymore because they've grown so tired of the poor practices that credit cards have applied in how they offer their services, how it's all about finding a way to get you to revolve eventually at those high interest rates. So there's a lot of opportunity to change, provide really customer-focused, transparent, and great services in this area. And it's the dream of an entrepreneurial company because you have all the kind of high barriers of entry, low innovation, a lot of tech legacy. Like you can't imagine a better place to innovate than in retail banking in that sense.
Sebastian, it's good to catch up with you. Hope to check back in with you soon, especially if there's any news on the IPO front. Happy holidays to you, Sebastian Siemiatkowski, Klarna CEO. Thank you so much. Appreciate it.
Thank you so much for having me. Thank you.
Well, coming up next, we will be talking back to the fast food industry and talking Dunkin' Donuts specifically. Stay with us.
All right, with indoor dining restrictions kicking in again across the country, including today in New York City, and no stimulus in sight, the restaurant industry is headed even further into a dark place. Nigel Travis is the current chairman of Dunkin' Brands and its former CEO, and he joins us now. Good to talk with you, Nigel, as always here. No stimulus plan or what for restaurants as it appears in the latest bipartisan bill. As a veteran of the restaurant industry, can you believe what's going on here?
Well, it's actually my last day, firstly, as chairman of Dunkin', because we have new owners as from tomorrow, Inspire Brands. Wish them good luck. Yeah, it is strange, Brian. I thought a stimulus just before Christmas would have been something that everyone wants. Certainly, the restaurant industry has been looking for extra help for several months. The National Restaurant Association has made continued pleas. And I would have thought that people will be listening in Washington. So it is disappointing.
Nigel, it's Julie here. So what kinds of conversations have you been having with the folks in Washington? And what do you think the problem is? Is it just politics getting in the way of what small businesses might need?
Well, small businesses really does personify the restaurant industry, and I think all the various associations, even the NRA, the restaurant one, has clearly done a very good job. But I don't think people in Washington have been. Uh, I think they understand the message, but the politics, as you suggest, Julius, seems to have got in the way. I hope the latest plan of splitting the bill, from what I read and saw on TV this morning, I hope that works, because certainly we do need stimulus. I mean, I talk to a lot of small restaurateurs. A lot of them are right on the cusp. A lot of them have gone out of business already. The restaurant industry desperately needs help. Now, I see that various numbers, 100,000 restaurants have already gone out of business. I would have thought that would have indicated that help is needed. We've now got the vaccine. The vaccine is coming. It's slow. It's rolling out already in the UK, and obviously I have businesses over in the UK with my football club, so a little bit ahead of the US. So I think the vaccine plus stimulus will give some hope back to the industry, and hope is what's needed.
Nigel, the National Restaurant Association put out, I believe a week ago, saying that another 10,000 restaurants can close over the next few weeks. Just based on your conversations with those smaller restaurant owners, does that sound about right to you?
It probably sounds a bit light, actually, Brian. So I think the issue they see is they've fought a very good fight to keep going. How much longer can they keep going? Now, I think, to be fair, some of them haven't been particularly creative. A lot of the smaller restaurants have done a great job, but some haven't. I think they haven't embraced some of the big trends in the industry, as well as some of the bigger trends, like curbside. Curbside's a great indicator. This was founded in the restaurant industry, has now moved to retail. It's very big in retail. And I say that sitting on two retail boards, Abercrombie and Advance Auto, both of which are doing it extremely well. I think also they haven't embraced the digital world as strongly as some of the chains, which obviously has been a real change maker over the last 10, 15 years. So I think the fault for some of these independent businesses goes both ways, both support from government and their own initiative, but definitely help is needed.
I also want to ask you about the franchisees, because they, of course, are small businesses who kind of are in between, right? Because they have a relationship with a large chain. Do you think that they are more insulated because they have the support, or do you think that they are just as vulnerable as, individual mom and pops?
Well, certainly during my time at Dunkin', and then when I gave up being CEO, Dave Hoffman's time as CEO, certainly at Dunkin', we gave a lot of support to the franchisees. And I think the benefit of a franchising business is that franchisees have someone to talk to. They can learn about best practice. I mentioned just now about digital. That's one of the huge benefits of being in a franchise business. You see best practice not only in Dunkin', using that as an example, or my prior employer before that, Papa John's, but you also see what other franchisees are doing, which means that you can really learn from the best in the same situation. So the franchising business, not many people talk about it. It's a fantastic business. I happen to be the chairman of ServPro now, which is owned by Blackstone. And again, I see the power of the franchise business. And I think as a result of the pandemic, the fact that people will realize that in a very fast changing world, they need more and more guidance, more and more support. I think you'll see franchise continue to be very strong for investors and very strong for people looking to be entrepreneurs, but with the support of a strong infrastructure that a franchise system brings.
Nigel, before I let you go, I mean, do you think one of the end games here is post-pandemic, we're just essentially left with big restaurant chains, Dunkin' Brands, McDonald's, you name it. These are going to be some of the most powerful companies in the United States.
There's no doubt that that is a fear. Clearly, before the pandemic, everyone in the industry was saying that the restaurant industry was over-restauranted. In other words, too many restaurants. It's probably gone the other way now. It does give a lot of white space for chains to grow into. Since I retired as CEO, I've spent a lot of time looking at other chains within the industry. A lot of them have, in my view, a lot of opportunity. I think the restaurant space for investors is a very interesting space. As I just said, the franchise space is absolutely one that needs to be supported from an investment point of view. But clearly the losers could be the mum and pops. And as I said before, it's not just the government's fault, it's not industry fault. I think a lot of them haven't embraced new ideas. Now, having said that, I've got some friends who have a small restaurant chain. Not only do they have great cuisine, not only have they adapted to, say, outdoor seating when you can do that, not only have they adapted to delivery and digital, but they've also started doing ghost kitchens. In other words, you can do more than one brand from a kitchen. That's a great way of leveraging your assets. So that is part of the answer.
I'll leave it there. Nigel Travis, always good to see you. And I know personally, I can't believe today is your last day as Dunkin' chairman. I've only known you as Mr. Dunkin'. We've been talking for about over 7+ years. So good luck in your next path.
Thank you very much, Brian. Good luck to you too.
Thank you. All right, do stick around. Much more ahead on Yahoo Finance Live.
All right, welcome back to Yahoo Finance Live. Miles Upton here in New York. Let's take a look at the markets here as we get today's session underway. All three majors are higher. About an hour and 20 minutes into today's trading session, we see the NASDAQ is still the leader there. Well, as the year wraps up and we continue to get retrospectives from various Wall Street banks, David Kostin and the team over at Goldman Sachs catching attention this morning and declaring, Julie Hyman, that 2020 is the year of the SPAC, and Goldman going through all the different SPACs that have come to market. I thought it was quite helpful. They had a graphic in there, all 36 of them. Nikola, of course, is the 34th best performing out of all 36, worth noting there. They kind of kicked the whole thing off. But I think also thinking about why SPACs happen at all. And as we see here in the lower third, Goldman's view is this isn't going anywhere. I mean, this is really the future of M&A and private capital deployment, at least as far as Goldman Sachs can tell.
They're sort of extrapolating, right, that things will continue at the current pace. So they are looking at a ratio, they say, of 5 times SPAC equity capital this year to target M&A enterprise value. So that's what these companies are looking at, and that's what they're paying here. So that's where they get their $300 billion number. And it really seems as though there are a couple reasons why, if you're a private company, a SPAC might be attractive to you. First of all, there's that guaranteed payout, right? You know what you're going to get up front. There's no sort of guesswork about negotiating the pricing of the IPO, not knowing where it's going to trade on that first day, but also not knowing where it's going to price necessarily. And there's also, as we know, not as much regulatory transparency that is required. Now, in the case of something like Nikola, didn't turn out so well in the end, because eventually things did come out that investors were not too happy about. But those seem to me to be the two kind of driving factors behind some of these SPACs.
With all due respect to Goldman Sachs guys, it's also the year of the McRib. But I also note this too: 53% of SPAC capital has come since Labor Day, according to Goldman Sachs. And you know what happens with that? Potentially more eyeballs. We've seen a lot of eyeballs, a lot of coverage on SPACs. We've brought a lot of these guests on to talk about the future of their companies, but more regulation. At what point does the SEC come out next year and start cracking down on these companies? Because it is too easy to go public via a SPAC deal. You just don't get that type of scrutiny as you do the traditional IPO process. So I wouldn't be surprised the SEC comes out here and drops the hammer.
And I think another interesting aspect here, and Vern Hobart, who used to be an equity analyst, he now writes a newsletter. It's called The Diff. It's on Substack, like everybody else's. He had a great note on SPACs last week, I think it was. And he made the point, which Goldman gets at here, which is that SPACs are this perfect example of how investors think today. Vern's point was that the average, like a good SPAC is better than average, and a bad SPAC is worse than average. And so really, it sort of distills down to, and look, Goldman is building their work like all shops do off what their clients tell them. And basically clients are saying, Saz, we're willing to deal with no disclosures, but if this thing hits, it's going to hit better than, a regular index fund, right? And if it flames out, whatever, fine, on to the next one. There's more SPACs where that came from. And I think that really kind of says it all about the market today. And we talked all show about the inability to get returns. Well, you got to swing for the fences. You got to bring that slugging percentage up. And I think that's an enduring theme from the last decade that I expect will continue as we get into the next. All right, that's going to do it for us here today on Yahoo Finance Live on this Monday morning. For Julian Nyman and Brian Sazzi, I am Miles Udland. Zach Guzman and Akiko Fujita can have you here for the next couple of hours. They're back here in just 2 minutes.
Welcome into Yahoo Finance Live, everybody. Happy Monday. I'm Zach Guzman alongside Akiko Fujita. Right now, we are seeing markets catching a boost here on some optimism as the Pfizer vaccine begins to roll out here. That's giving a bit of a boost to the markets. The S&P 500 tries to halt a 3-day slide. You can see that index up nearly 0.5%. The NASDAQ, the biggest gainer today, up by about 1%. As the first shots of the Pfizer vaccine already getting administered earlier this morning. We're also watching updates out of Washington, D.C., also boosting optimism there on the stimulus front, as that $908 billion stimulus bill that we've been discussing over the last couple of weeks looks to be broken up into two parts, including a $748 billion measure that looks a little bit less contentious there, excluding key sticking points, both liability protections for businesses and $168 billion in aid for state and local governments getting broken out. We'll see how that goes as Congress looks to shake a one-week deadline to pass that in terms of that getting tied in with the stimulus bill. But let's kick things off here on the vaccine front, as we've seen about 145 hospitals and other sites getting that vaccine in terms of the doses rolling out to the American public here, starting with the frontline workers and nursing home populations. We're going to see another 425 sites receive doses tomorrow, according to the Operation Warp Speed overseeing general there. Pfizer shipping out nearly 3 million doses in this first wave, with more expected in the coming weeks. We're also checking to see if Moderna's EUA will be coming through by the end of the month as well. But for more on that, let's get started with our first guest today. Dr. Venkatesh Naglapati is CFP Physicians Group President. He joins us now. And Dr. Naglapati, appreciate you taking the time to chat with us here. I mean, you're seeing these roll out. People have been waiting for this moment. Now, finally, here as those first vaccine injections start coming out. What's your take on where we're at as we continue to see cases rising, but now finally have the positive vaccine news to watch?
Good morning, and thanks for having me. And again, it is exciting, and it's our first step in this battle against COVID. And while we are all excited and looking forward to the vaccine rolling out, there's still a lot of cautious optimism with that. The reasons for that, twofold, is the delivery and the fact that it's 2 doses. 21 days apart for the Pfizer and 28 days apart for the Moderna. So it's the entire logistics of making sure that our patients get both doses, because all the studies point to the fact that 2 doses are required to have good immune system response to the COVID-19 vaccine. So kind of going through the logistics of administering and making sure that everyone gets the optimal vaccine doses is a challenge, but I'm sure we can we'll deal with this day by day. But on a front where I oversee the group, which is primarily a geriatric group. We provide services in skilled nursing facilities and assisted living facilities, and on an outpatient basis too. So all of our homes are ready. All of our patients have consents, and they are in place. The delivery mechanisms are in place. We're just waiting for the vaccines to hit the doors, and then we should be good to go. The idea or the goal is to vaccinate most of our residents in institutions before December the 25th, or at least by the end of the year, is what our goal is.
That is the expectation, but in the general public, there's been a lot of skepticism around just how safe the vaccine is. A lot of Americans saying, look, when it comes time for my vaccination, when I'm in line, I'm not sure if I'm actually going to get it. What are you hearing from patients on the ground in those nursing homes that you serve?
So in the nursing homes and assisted livings, and even in the outpatient setting where I see geriatric patients, it's 95% of the patients are open to getting the vaccine. The way I put it is it beats the alternative. I know every vaccine has a side effect. Every vaccine is going to react differently to patient, but that's basically your immune system learning to fight the illness. So it's a constant process of education, sifting through all the false information out there. And you're just having a frank conversation with your patient saying, hey, this is what we have. this is the way the vaccine works. This is how we train your immune system to respond to the virus when or if exposed. And these side effects are part and parcel of the vaccine protecting you. So with that being said, as a physician, when I have a conversation with my patient, about 95% of the patients over the age of 65 are going to get the vaccine. They are actually looking forward to getting the vaccine because this is the first step in a little long battle with COVID.
95% would be much higher than what we're seeing out of the latest Pew survey there. About 60% of Americans now say they get the vaccine. That's up from 51% back in September. So, I mean, if we do see 95%, it would be positive for the country as a whole. But just when you step back and look at, I guess, the availability that's going to be there once we get past patients like the ones you serve or frontline healthcare workers as well, what are you grading, I guess, this nation's preparedness, considering the fact that we're only going to be seeing a limited amount of doses up until we get through into the beginning of 2021? Talk to me about how that looks in your eyes and what grade you would give it, considering those distribution challenges you're talking about and making sure everything's going to be going according to plan.
From my standpoint, in this long slugfest with the illness, anything is a positive. So any step in the right direction, I view as a positive. Obviously, there are things that could be improved upon and could have been done better. But that being said, we kind of roll with the punches. You know, at this point, I like to look at the positives. I like to improve and build upon what we learned so far. And you know, even if it's 1 million doses now, 3 million doses by the end of the week, and hopefully about 20 million doses before the end of the month, I view it as a positive. I think it's definitely a step in the right direction.
And doctor, how are you doing in terms of staffing? We've heard a number of hospitals, for example, say that they don't have the staffing in place to inoculate everybody at the rate with which they need to be. What are you hearing on the ground there?
It's definitely at, what do I say? We're at limits with staffing, both in the inpatient and the outpatient settings. So, vaccinating the frontline workers is a key step in the right direction in maintaining what's called a healthcare capacity to be able to provide the services needed for the population. So protecting the healthcare workers, again, is a step in the right direction at preserving our capacity to care for our patients.
Yeah, it's a strange time to be focusing on the positive there on the vaccine front, but also watching more cities around the U.S. moving in the opposite direction in terms of shutdown orders. We'll be chatting that later in the show. But for the time being, appreciate focusing on the positivity with you there. Dr. Venkatesh Naglapati, CFP Physicians Group President. Appreciate you taking the time again.
Thank you so
I want to
much.
shift over to something else we've been watching play out in Washington, D.C. Aside from just stimulus conversations, over the weekend we got reports multiple U.S. agencies, including the Treasury and Commerce Department, suffering security breaches that are suspected of being carried out by Russian hackers working for the Kremlin, according to multiple reports. And those hacks, which could have been going on longer than a month, were serious enough to lead to a National Security Council meeting at the White House on Saturday. For more on that, I want to bring on Yahoo Finance's Jessica Smith, who's been watching all those reports play out here. And Jess, I mean, it's not good. It follows one of those FireEye investigations as well, security breaches at that cybersecurity company. So what are we learning now?
Well, U.S. officials aren't saying much at this point, but they are working to figure out exactly what happened and what all may have been compromised. Email systems at the Treasury Department and at the Commerce Department were compromised, and that may be just the tip of the iceberg, according to Reuters, which first reported this news. According to several different media outlets, a Russian intelligence service is likely behind this attack, but so far Russia has denied responsibility. The cybersecurity arm of the Department of Homeland Security over the weekend told federal civilian agencies to review their networks for compromise and to stop using products from a company called SolarWinds. That company has contracts with the U.S. government, including military and intelligence services, according to Reuters. And the thinking is that the attackers put malicious code in the legitimate software updates released by SolarWinds. FireEye did say late last night that it found a, quote, global campaign that uses this method. FireEye believes that it's found signs of compromise dating back to spring of 2020, but it didn't specifically say what organizations may have been compromised. Microsoft also weighed in late yesterday saying it isn't releasing details about specific organizations, but there have been, quote, increased activities from a sophisticated threat actor that is focused on high value targets such as government agencies and cybersecurity companies. We believe this is a nation state activity at significant scale aimed at both the government and private sector. So Kiko, Zach, still a lot to learn here. We'll be sure to keep you updated as we find out more.
Yeah, Jessica, you mentioned some high targets there in terms of the government being targeted, but the NSA did warn earlier this month about state actors targeting for this work from home environment, and this is something that we have heard increasingly from cybersecurity experts. Is there any indication here that there was more than what we know so far? I mean, what are you hearing in terms of the scope of the investigation?
Yeah, this might just be the beginning. There could be other organizations. We are still waiting to hear more. Again, U.S. officials really aren't saying much, but they're looking to see if other government agencies and other maybe private companies were targeted here. As you heard from FireEye, they said this is a global campaign. Microsoft saying that they're targeting government agencies and cybersecurity companies. So I'm sure we'll be learning more about this in the coming days.
Yeah, I'm just taking a look at some of those cybersecurity names. Obviously, enjoyed quite a strong 2020 here when we think about how a lot of this information has shifted to the cloud, as well as the agencies you're describing there, more becoming in the online realm there at risk of some of these attacks. But Jess Smith, appreciate you bringing us the latest there in DC. Want to back up and see how this all plays out here. Not just those hackings, of course, cybersecurity names, as I said, been one of the outperformers, but where are the other opportunities there in the market right now? Join us to discuss that as our next guest. Bonnie Wonkatrol here, Western Asset Portfolio Manager, joins us now on the show. And Bonnie, appreciate you taking the time to chat. I mean, when we look at this, it's interesting because we've been discussing for weeks now kind of this rotation away from some of the growth names. There are other opportunities you're looking at here, including in the retail space. So talk to me about what has your eye as we shape up for 2021.
Yeah, so we've been thinking about how this pandemic would evolve for quite some time, since the beginning of the year. And we actually had a group of people dedicated to tracking the scientific developments around the virus. They're actually reading the scientific journals and the vaccine trial results as they were coming out. So we've evolved our positioning as we've gotten more clarity around the virus. Retail in particular is one of those sectors where we were actually very well positioned coming into the pandemic. So our retail analysts had seen this e-commerce trend building already and seen the stresses on the sector. So we were underweight that sector as a whole, but they were overweight the larger omni-channel retailers that have benefited from the pandemic, as well as some of the niche retailers that were active in things like sporting goods, toys, beauties, arts and crafts, pets, and all those things have benefited as well. And I think going forward, after the vaccines have been distributed, the retail analysts still believe that these trends are going to hold, and we really like our positioning within that sector.
Bonnie, one of the other sectors you've also been looking at are airlines, something that you were underweight going into the pandemic. We've had a number of guests on who say there is no case for the airlines, largely because they don't think that even post-vaccine travel will return to pre-pandemic levels, at least in the medium term. What do you argue? What's the counter argument there? What is your case for investing at the levels airlines are trading at right now?
Sure. Well, our airline analysts would agree that there will be a longer road to recovery, and it could take at least 3 years to get back to pre-COVID levels. Although we will see probably a bump in the second half of next year when the vaccines have kicked into effect. But from a bondholder perspective, since Western Asset is a bond specialist, we did something pretty early in the pandemic that made sense for us because of the structure and the pricing. And what that was to take positions in short-dated airline bonds in airline carriers that we thought were better managed and had stronger balance sheets. Our airline analyst, Suzanne Trepp, went through and looked at the cash burn of these companies and really stress tested them to see, whether this would make sense. And that was a position that we felt very confident about early. And then as the year went on and the airlines continued to raise cash, we continued to participate selectively in issues, again, that made sense from an issuer and from a structure standpoint. So although there are doubts about what the airlines will look like over the medium term, we think longer term, it does make sense from a bondholder perspective in the positions that we've chosen. And we also think that the airline industry will emerge, a little bit leaner and a little bit stronger, which from a bondholder perspective is actually quite positive.
And Bonnie, just to return to your points there on the retail front, it's interesting to see, I guess, some of the bets playing out here when we think about commercial real estate, mall operators, other things like that. We got the update from JBG Smith earlier back in November, looking at the drop that they've seen in rent payments, only about 1% on the residential and office side, but about a 35% drop in rent uncollected on the retail side. So talking about what that thesis looks like, is it just kind of a quick return to normal when things open up? Because obviously if you're betting on the e-commerce side, I imagine the drop in brick and mortar might still be there when we get out of all this.
Well, I think there in the commercial real estate space, what you're looking at is very collateral specific, and that's what our team does. They look really at the property, and it depends more about the property and the market. So for the positioning there, we're looking for higher quality properties in markets where there is resilience and where we have seen foot traffic come back. It's still below, obviously, the pre-COVID levels, but we think the cash flows there are more attractive than in some of the lesser quality markets where we do expect there to be further deterioration, in line with our retail analysts on the corporate side, their belief that this e-commerce trend is here to stay.
And to the larger debate that's been playing out on the market and growth versus value, I mean, what are you looking in terms of allocations? On the one hand, we've heard over and over that sort of the value play is where investors should be positioning themselves right now in anticipation of the economy reopening 3 months, 6 months down the line. And yet we've seen sort of what we saw last week with some of these tech names where there is huge money that's poured into that front. So how are you looking at this debate here? And what do you think the allocation should break down as?
Well, the way that we've been positioned previous to the vaccines coming out is that we had a heavier overweight to the higher quality investment grade issuers, some of which were trading at really depressed levels earlier in the spring. And those have really tightened in. The spreads on those bonds have really tightened in. And so as that's happened, we have gone into the more COVID sensitive sectors over time. And where we see opportunities right now are really within that structured credit space. So the mortgage-backed securities, both on the residential and the commercial side, but also in emerging market debt, where we have seen a very strong response in certain countries, both on the fiscal and monetary side, which we think will be very supportive for those countries, as well as obviously the vaccines, which will get to them in a sort of a later stage than the developed markets, but should benefit them. So we think that spreads there are actually very attractive as well, where they're still trading 50 to 75 basis points wide of their investment grade counterparts. So those are really two areas that we're looking to increase our exposure to and perhaps trim some of the names in the more fully valued investment grade issuers that we track.
Yeah, when you look into those emerging market themes here, I guess there are larger questions there, considering the fact we focused in on the US, the UK kind of being better positioned here when it comes to their vaccine purchases and what that looks like. It's a bit of a smaller question mark now when we consider those going well. But when you look at some emerging market countries here, which ones do you have the most confidence in on for investors to, I guess, maybe shift more of their portfolio there if there is an opportunity next year?
We are focused on the investment grade rated sovereign issuers. So that is an area that we're focused on generally. The lower quality issuers, we think that there's still some pain. We have seen the defaults this year, which we've managed to avoid. Those countries were already, weak in terms of their balance sheets and in terms of their governance coming into the pandemic. And we think that there could be potential ripple effects even from there. But there's still a number of names that we like. They're investment grade rated and that we think do have the strength to benefit from this recovery. Although certainly our analysts are not looking at this and painting it with a broad brush, and we'll be tracking very closely, inflation and other economic indicators, especially going into the second half of next year, where you could see some of these delayed effects from COVID playing in.
Certainly some important takeaways there. Bonnie Wong-Trickle, the Western Asset Portfolio Manager. It's good to talk to you today. Thanks so much for your time. Coming up, Electronic Arts racing ahead, acquiring UK game developer Codemasters, how the company upstaged a key rival to close in on its largest deal in history. That's ahead. Welcome back to Yahoo Finance Live. Electronic Arts getting a big pop in this session. That stock up nearly 1.5% on a blockbuster deal in the gaming space. EA upstaging, I should say, rival Take-Two Interactive to acquire racing game developer Codemasters in a deal worth $1.2 billion. Let's bring in our gaming expert, Dan Halley, who has been tracking this for us. And Dan, it's an interesting development here because Codemasters was in talks with Take-Two, but essentially EA coming in with a better offer.
Yeah, really, that's what it comes down to. And it looks like EA here basically wanted to ensure that Take-Two couldn't get Codemasters and make itself an even larger threat to EA. Just to give you an idea, Take-Two makes Grand Theft Auto. They also make Red Dead Redemption. Those are two of the largest franchises out there. Grand Theft Auto continues to make money for them. It's basically just printing it now at this point. While EA has larger franchises, but they haven't had anything in particular that's been a massive hit as of late. So they're really looking here, I think, to ensure that they have a greater catalog available to consumers. They also have their own game streaming or cloud gaming offering. Basically, it's a subscription service where you can get access to as many different EA titles as you want. It's called EA Play. That, by the way, is part of Microsoft as well, Microsoft's xCloud platform. But when you look at this deal, it clearly was that EA wanted to take this away from Take-Two. But Take-Two has responded and said that they're going over to see if they can make a different deal or what else they can do to try and get Codemasters. Now, Codemasters makes racing games like the popular Dirt franchise, which is about basically off-road driving, and the F1 series. So it would be a big coup for EA to get them, considering they also have their own racing franchise in Need for Speed. But whether or not the two come together, we'll just have to see what Take-Two has to offer.
Yeah, and Hallie, I mean, right now it seems like both video game makers here in discussion are looking at kind of those other opportunities in realms where they don't really necessarily have a strong foothold like racing in this case. But I mean, how much of it does it signal kind of that move to consolidate right now ahead of what's expected to be even growing demand when it comes to people out there gaming with the launch of PS5 and the new Xbox as well?
Yeah, the industry, it's interesting. It's been consolidating a lot. Microsoft is part of the reason for that. They were scooping up studios left and right for a while. They recently picked up ZeniMax Media. That makes some of the biggest games out there in Doom, the Elder Scrolls franchises, Fallout franchises. But Sony has also made moves on its own. I think really what you're seeing here is these companies getting access to more IP so that they then can offer them and give people a reason to get on their systems. And I think one of the things that's interesting is as we start to see more games enter this kind of cross-play compatibility space where you can play on an Xbox with people on a PlayStation, you're not going to see as much need for people to dive into a system because of the games. It's going to be what the features are that those systems have to offer and how well they deliver them. But I do think, the consolidation in the space is interesting. However, there are so many smaller developers out there, and they keep coming, that push out incredible games all the time. So there's still plenty of opportunity out there for the gaming space. This is just some of the bigger names. They're consolidating. I don't think it necessarily means that we'll see any kind of blowback for the industry or any kind of slowing in innovation. I think it's just that these companies want to make sure that they're able to tackle each other in the best way possible. And clearly doing that is kind of sliding under and saying, look, we'll give you more money than Take-Two will.
Yeah, tough to turn that away. We'll see what happens there. Dan Howley, appreciate the update on the gaming sector. We're going to take another quick break here on Yahoo Finance Live, but when we return, watching Tesla's moves as they put the brakes on production with some of their less popular models, shall we say, what that means for the stock ahead of inclusion in the S&P 500. We'll chat that after the break. Stay with us. Welcome back to Yahoo Finance Live. I want to spotlight the action we're seeing here in Tesla with shares in the green following an interesting report on plans for the Model S and X at the electric automaker. Tesla planning to idle production for those models through January 11th, according to an email for the plans obtained by CNBC. It's an interesting production pause considering those models are not exactly the most popular there, only about 11% in terms of deliveries in the latest quarter. And a new report out from Electrek saying part of the reason could be that the automaker has already met its goals for Model S and X deliveries for the fourth quarter. Interesting there, could be driving the price action we're seeing here today. For more on that, I want to bring on our next guest. That would be Gordon Johnson, GLJ Research CEO and founder here with us. Gordon, appreciate you taking the time here to chat. I mean, it's obvious that Tesla's been focusing more on the cheaper Model 3 here. That's the main driver, of course, the main shift, kind of ahead of the incredible rally we've seen here this year. But what do you make of that, and how important is it for Tesla and Elon Musk when we talk about the Model S and X?
Well, I think it's baffling some people because just a few days ago, Elon Musk put out an email, an internal email that was leaked to the public that said they were effectively production constrained. They needed to significantly increase production. And then a few days later, we find out they're shutting down production for the S and X for 18 days. Look, I think it's one of two things. One being, A being rather, demand is a problem, or B being rather, they need to retool or refurbish the model to make it more attractive. Either way, it's a demand problem and kind of stands in contrast to what Elon Musk said just a few days ago, i.e. that they were production constrained.
So which do you think it is?
I think it's probably a combination of both. We know those models haven't sold well, so I think that's a problem for them. But I think there's other issues that we can get into. A couple of actions Tesla has taken recently that suggest demand is really a problem.
What might those be, though? Because when we're talking about a stock that's up so much there this year, people have been talking about the idea that demand has been strong, considering the delivery targets being shattered quarter after quarter for Elon Musk and co. I mean, it seems like things are moving in the right direction, but I know there are other critics out there that point to increasing competition, not just from the traditional automakers, but a lot of other ones out there, mainly NIO in China, maybe eating into the China growth story that's propelled this stock so much this year.
Right. So I think what's important is, look, we're the biggest bears on the street, and our estimate for 4Q deliveries is 180,000. The street consensus is below us. I think everybody's below us. So I think the street overall is sandbagging their numbers, which allows Tesla to continue to beat. But think about this. Just over the weekend, we found out that Tesla is offering free supercharging for a full year if you buy a car made out of Fremont before the end of the year. That suggests they're trying to pull in demand. We found out last week they cut the price on their German inventory cars by 1,090 euro. That's a big price cut. They're trying to push through demand. And we know that Elon Musk, has cut the production, et cetera. And if you looked at China, right? So in China, people got excited about in October, the sales were about 12,000. In November, it looks like they jumped to about 21.5 thousand. We believe what enabled that was an 8% price cut at the beginning of October, which we really saw in November. But the problem is that price cut was enabled by them changing technology, LFP batteries, which are now being widely reported in China to only get 50% of the range in the winter and only get 50% of the range reported today in Europe in the winter in cold weather. So the problem is, potentially for Tesla, is are they going to be able to continue to sell that amount of cars in China now that people are seeing that the range is only half of what's promised? And we also think there's issues with respect to the coming S&P inclusion.
And I mean, I was going to say that all of this you're pointing out here, as we look to that inclusion on Friday, certainly the announcement was a big catalyst for the stock. You say that you're very bearish on it right now. We're looking at Tesla's trading at $635 a share, roughly. Where do you think fair value is?
I think fair value for Tesla is probably around 60 to 80 bucks. We think it's going to head there. We think it happens next year. We think
60 to 80 bucks.
Going to be a problem. Want to talk? No, go ahead. I'm sorry.
Did you say 60 to 80 bucks?